Hello, this is Cryptolyze. I hope you are well. This Friday 3, November 2023. It is with pleasure that I meet you today to talk crypto, to talk BTC. We still have a lot of news between SBF, who will certainly end up in prison. We don't yet know for how long. And then we'll go for a little tour of the courses because we had a little bit of movement that, whether at the level of macroeconomic actions or whether at the level of BTC, and that starts all right now. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training course worth 400 euros, which allows you to learn blockchain, crypto, investment, technical analysis, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. We will start with PayPal, which receives an injunction from the SEC. PayPal has issued PYUSD, which is a stablecoin based on PayPal with a typical dollar bundle. They received an order from the SEC to issue new documents and provide new documents to keep PayPal running smoothly. At the level of PayPal USD, which is the PYUSD, not easy to say even though we agree, we will find ourselves on a market cap which is 158 million nevertheless already. With the volume, which is nevertheless 24 hours, we are between 2 and 5 million. And we have several large exchanges which have decided to use PayPal USD in particular, which also shows an adoption phase, and alongside PayPal is working on the integration of this stablecoin in different uses, and therefore it will give it a little more weight to crypto. We continue with SBF. So SBF, who was, convicted finally, who was validated guilty on the 7 charges. What we're going to wait for now is going to be the conviction. And the conviction is not going to happen right away. It's going to take a little time. It's going to be March 28, in which they risk up to, I believe, 115 years in prison. So really a lot. So the bets are on. Don't hesitate to say in the comments how many years you think he will have in prison, because in any case, it will be relatively high. What is interesting is that we do not yet have how much time these acolytes who also pleaded guilty and testified against SBF. We have Caroline. We will have Gary Wang next to us, who we don't know yet, so it will take a little while. They directly pleaded guilty, so I think there will be a small sentence, but it will be interesting to see the gap between the two. We are moving forward in the macro part. Little news yesterday. However, today we are going to see the services PMI. We are going to see the unemployment rate, which is going to arrive, the non-manufacturing PMI index. So a lot of indications, a lot of indicators from 1330. It will happen, so we will have to monitor the prices. But speaking of costs, we had a big surge in the SP 500 and the NASDAQ. A really big performance we had yesterday. It's going to be the biggest week we've had in a very long time, since this retracement, which is rather positive for the indices. And here we are redirecting towards the big retest area. The 2 small retests for me were cut. I cut them so as to be able to rework if we ever have a higher retest. So I cut them. A losing game so that I can continue to strengthen my big position. If we ever retrace above 786 and hit this retest zone there is a good chance that I will take all of my profits. In fact, on the total movement that I made at the level of the NASDAQ, because precisely there we will have a break-off structure sufficient to say that we could have an acceleration to get the 4,554. In any case, it is a positive sign for the market given that we are in November, and we are preparing for the end of the results, and therefore the return of volatility is a good sign, especially since it is also greatly supported by the NASDAQ, with a candle which has completely absorbed the pressure. So we will wait for the weekly close to be sure of that. If we ever close again at these levels, this excessive weakness on the NASDAQ, that means that we will potentially be able to get the 15,600 before the end of November. And that would be positive because that means that it would mainly hold the SPF 500. And that would lead to an SPF 500, which would be more in a form of ranging. A NASDAQ, which would be in a form of breathing, or even which could seek a little higher. And we will discuss this in any case on the point of tomorrow. Therefore, the weekly. At the level of the 10 years of the US bands. Therefore, a very important level in which we had typed a plus of 5%. Therefore, which was a critical level. We are in the process of retracing. We are in the process of validating a retracement. We will have to also wait for the weekly closing. We will have to go below 4.6 or 4.5. We will have to imperatively break below. If we break below, that implies that we have a bearish approach which will be validated with really the rupture of the 4.5, which will allow us to have an acceleration of the decline. And what is interesting is that we did indeed have a bearish divergence which had already been present for some time. So this is also one of the reasons why we have an acceleration in the Nasdaq and the S&P 500. It is because we are starting to have a transfer of liquidity which is being made by this fall. So we have an easing of American bonds and therefore necessarily behind a transfer of capital between bonds and precisely equity, and therefore a greater injection into equity. Then in bands, I still find that it's a little too early for my taste, especially in terms of the actual drop. So here we will have to monitor. We could very well have this retest to have bearish continuity. In all cases, we achieved the objective that I initially wanted, which is the objective that I had presented to you for some time already. So here, the real breaking point will be the break of structure to watch out for in the weeks that happen, or even why not days. But I think it's more like weeks. In terms of BTC, we still tidy up. We haven't moved too much, especially when we look in comparison with BTC Gold. I don't know if you noticed, I purposely did not specify the typology of the graph to show you that in fact we are in a graph that is almost identical. I'll give you both. We are going to put the two in this way, so that you can clearly see that we are in approximately the same schematic. This implies here that the dollar-gold relationship is approximately identical when compared to BTC. This relationship is actually very interesting because we see that we are not very much like a notion of representation of a safe haven asset equivalent to gold. Many people make the conflation of comparing BTC to gold at the volume level, when it is more at the level of the ideology itself, of the representation of what a safe haven is, especially since we know that gold, for example, gold prices are highly manipulated. Certainly it is one of the most manipulated assets with the notion of paper gold. We are really going to come back to BTC, in which here I am on the CME graph. So BTC USD from the Chicago Mercantile Exchange, therefore, which is the representation of futures, and therefore institutional, in which we still have here a week which is relatively flat. We are not going to hide it if we close the week like that. We will not have had any volatility during the week, and we will just take a quick look at the general upward acceleration that we had at that time. The first acceleration in which I told you that it was very important that we have a very big break-off structure, and that there we had to buy it was here in this part, and I had from the start in fact traced these different zones by telling you that for me it was a resistance to break which then became a support to retest. And when we broke here this zone there, I explained to you that it was a very important support, and that if ever we broke it we were going. Look in the reload zone which was further down, see reload zone 2 which is even further down. So these are points that I keep, that I will always leave, because for me we really have to go and make a very, very strong break in the Sierra to say to ourselves that we are not going to go and retrace, especially as long as the halving is not very important. We have already seen flash crashes or bearish accelerations before the halving to prepare for the halving, so we always keep in perspective. That does not mean that we are bear, it just means that we are prepared for everything. And many of you in the comments ask me the following question, and it's funny because you always have the same question, is we could watch 25,000 again, or don't you think we can't go back to 25,000 now? So this approach, this reflection is still short-termism. This is because you are in a psychological notion which is really close to the false word. That is, you are either not exposed enough or you are in too much of a hurry. That's really the idea. That is to say, here we are in an important area in which we are retesting the block before Terra Luna. We are in a profit zone. We are in a salt reloading zone. If we do an Elliotist count, we have this representation of having waves here which give us precisely this big acceleration with a wave 5, which would be here. All right? If we compare it and we just do a little classic Fibonacci extension that we know very well to calculate wave 5, so which would be wave 3, the top of wave 3, on here the retracement of the oven. And what are we going to get? We're going to go after the objective of 618. We're going to activate the 618 and you'll see that we're right on it. So we still have an indication of a probability of an end of extension, which could be an end of a great one, for a retracement of a large 2 and therefore prepare a large 3 indeed. So we could also in this approach a situation, it's not being bear to accept that. It's not being bear to say to yourself that there's a probability that this is the case, just as it's not being bull to accept the fact that there is a probability of upward acceleration with in particular the validation of a spot BTC ETF. The important thing is to be prepared for both situations. The fact that I am asked the question, can we see the 25,000 again? This question does not exist. It implies that behind you have not worked on your exhibition. It means that right now you are asking yourself the question, should I buy or not? Also ask yourself the question, is it easy to buy here? Right now, psychologically, everyone is telling you to buy. I can tell you that when we bought back here in this area, which was the rupture of SVB, when we bought back in this area, when we bought back here, when we did a retest, there were areas that were very complicated. There was no one to tell you to buy. It is in these areas where, in fact, when it is complicated, this is where we must act. There, it's relatively simple. For what? Here it is also at the same time an area which is complicated in terms of risk ratio. That means it is simple because emotionally you are told to buy. But how are you going to protect your trade here? So if you are obviously not in spot, we are still in an interesting zone. Long-term on spot, I mean a BTC at 35,000 over the next cycle. We will be happy to have bought at 35,000, okay? Take this into consideration. On the other hand, for a trade perspective, well, at what point are you going to protect, and how are you going to protect this area? It's really very complicated because in all cases, your low risk of being here, so your first TP, well, it will stop there, so that means we're not even in a R of 1, so we are not even in a protection ratio of 1-for-1. It is not necessarily very interesting. It would be much more interesting to wait for a form of pullback in which we would have a retest of these areas, and at that point we could protect quite simply by actually taking a distance from the pullback and then go back up there. But as long as we don't have that, or as long as we don't have a low that is put in place here to be able to protect ourselves and place our SL, it's not going to be possible. So that's why you have to be very careful in these situations. And once again, it's not the fact of being bear or bull, it's totally different. We're in a dynamic where currently we are preparing for all eventualities because the halving is not validated. Because besides, we are not going to hide that the bull run has a schematic which is particular. And there currently we cannot find again. We are in preparation for a bull run. We are not yet in this fox mold. In any case, that is my opinion in relation to that. And therefore we must be ready either for acceleration or for breakage bearish. For the moment we have neither one nor the other. We have an acceleration which passed on a rumor. We know the adage very well, so we are actually paying attention to this setup. And above all, we must be exposed. We must not be too exposed. We must keep cash. We must be prepared for everything. And precisely this good reaction will be to say to ourselves, okay, are we capable of retesting the 25,000? Am I going to be okay? If we retest the 20,000, will I be okay? If we accelerate to 60,000, will I be okay? And that's really the important thing because generally trading and investing comes down to psychology. To what extent you are capable of not reacting to the cost of the emotion. And this is what will determine whether you are a gainer or a loser, and whether you are really going to be a gainer or really a loser afterwards. So, we will do another exercise, certainly in the weekly. We will come back to this notion of very strong structural retracement that we are having, which is a form of breathing at the price level, and I will explain everything to you. That in Saturday's video. For the long term, we had this big acceleration which had started at 21 Wednesday, in which we subsequently made the bearish breakout. I told you that if we broke this area, we would have an acceleration, which was the case. First acceleration, second acceleration. And what is worth noting is that we did not break this low. So that's important because we have a form of subsidence here in terms of bearish pressure that we will really have to monitor. So for several reasons, it's that one, we went to take the liquidity at the top level, a large liquidity which had been left here by this zone. And we also have a lot of liquidity which is present here, in which we would like to look and which also corresponds when we look at this bearish impulse and this retracement. Therefore, the Fibonacci extension at 1.618 at the level of 34,000. For me, the 34,000 are an important target in which we would look for the equity left by the multitude of retests in this area. It is important to look for, and then we will see if we are making a retest and we use it as support for start again, or on the contrary, we use it as resistance to consolidate and revalidate a bearish breakout to seek lower liquidity. Liquidity which was left by these two zones. Moreover, if we break this zone of 33,268 here, we will have to ask ourselves questions because at that moment we would validate a distribution which would be very important. BCRST SAO UT low break. Therefore, at this point, we would go deeper and go and retrace and retest the 31,000, 32,000 from the break zone. On the other hand, we still have the possibility of having a UTAD in which we would not break the seal immediately, and that is why I would say that 1.618 would be a good zone in which we would do the 34. Then we would look for liquidity, we reconsolidate above, and we go back to doing a UTAD with targets that are a little higher, a target that we have had for some time. When we look at this bullish impulse and this retracement, which would be the 37,649, we keep in mind the 42,000, which are always the extreme size in which we would look for the 1,618. But that does not prevent us from first looking for 37,000, see the reaction of the price at that time, and also see the global advent. Because what is interesting is that there we find ourselves on a BTC which is sinking, which is in the process of lateralizing but which has a bearish breakout, while we have a macroeconomy which grew excessively yesterday. There is really a decorrelation, limit and inversion of the correlation between the two which will have to be kept in mind. The small point that stands out in terms of order flow is that we broke at the level of open interest, so that implies that the levers are becoming lighter, particularly with the bearish breakout. Therefore, the short-term leveraged buying pressure is decreasing, which is rather positive for the long term in terms of BTC. We are still looking for stops. That absolutely does not change. And at the level here of Kingfisher, what will be interesting to see is that in fact we are in the process of recreating liquidity. We are went to hunt for liquidity, first hunt for liquidity, and we see that we are in the process of recreating shorts, but that we still have a small block of longs which remains below this level. So it is that's what I'm telling you. We risk going to hunt them, and then we'll go and see, is that whether we are going to re-accelerate upwards or not, we will recalibrate directly together. I hope you liked this video. If so, don't forget to leave me a like and a comment. It always makes me very happy, and I take pleasure in responding to you. And we meet at 13:30 to talk about SOL Solana's crypto.